For those people who want to get into commercial real estate, maybe they start out where it's a side hustle for them, and then eventually they transition where they quit their day job and they're full-time in the commercial real estate. But it's a transition, and I think they got to get their feet wet, build their team, educate themselves, have some experience and so on. But, like any business, maybe it's a place where you start your side hustle.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today. Hey, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me today, I'm excited to have Luther Hagen. Luther, how are you doing today?
I'm doing great.
Awesome. Well, I appreciate you joining us. And a little bit about Luther, and then I'll let you kind of take it from there. Is you are a financial advisor, planner. What's the official title, I guess, Luther?
President and Wealth Advisor at Infinity Wealth Alliance in Apple Valley.
That sounds so much better than what I just said. Wow. So, and you've been doing that for quite some time. I'll let you explain a little bit more to the folks about that. You're also investing in some apartments. And so I kind of thought it'd be great to have you on to talk about the difference between the difference and similarities, I guess, between the two and why you're attracted to both, quite frankly.
Yep.
So,
yep.
Would you give our listeners a little bit more of your background?
Yep. Sounds good. Thanks, Todd. Well, my background is I grew up over in Wisconsin, Stevens Point, graduated from Gustavus Adolphus College in Minnesota, started in the financial planning business 30 years ago, and broke off from a Fortune 500 company 16 years ago to start my own company, Infinity Wealth Alliance, partnering with LPL Financial, which is the country's largest independent broker-dealer. I have 4 employees, and we manage about 150 million of assets, and we have about 200 client households that we work with. My wife and I live here in Apple Valley, and we have 2 daughters, one that's graduated from college and one's a senior at St. Kate's in St. Paul. So that's kind of a quick snapshot. And as far as investment in apartment syndications, I was listening to a bunch of podcasts as I do every night on the treadmill, and I came across your Pillars of Wealth Creation. And what piqued my attention was you were a teacher years ago in Burnsville, which is right next to Apple Valley. So that's how I reached out to you. We got together, I bought you lunch, and we talked a little business about apartment syndications and what you were doing. I liked your story and what you were doing, and so as a client, I invested here earlier on one of your deals. So it's been great. I think, I'm in the financial planning business, and a lot of people in our industry will talk to clients about mutual funds and ETFs and stocks and so on, but maybe not so much in real estate and other investments that we don't control. So for me personally, I think investing in Real estate's a great way to have passive income and to diversify my own personal portfolio and sources of income besides just portfolio income.
Yeah, and so I think, one of the reasons why I think it's important to talk to you is you're seeing kind of both sides, right? You're in the financial world where a lot of people, like you said, are they don't really say much about real estate unless it's a REIT, right? But they're not saying anything about private real estate and anything like that. And kind of almost, I know I've had a few people that said, well, I'm going to talk to my financial planner before we do an investment. And sometimes that's the kiss of death because the financial planner just says, no, don't do that. I don't know anything. We don't know anything about it. Not necessarily we don't know anything about it, but just kind of don't do that. And so I think having someone like you that understands it is extremely important and understands the value of it. Why? What do you see where you're okay with maybe telling a client, yeah, that's fine to look at that type of investment versus where some other advisors would not do that?
Well, I think some other advisors, Todd, might be thinking, well, if my client takes their, $150,000 in cash, invest it in a apartment syndication as a passive investor, that's money that they don't have to invest for that client. So that might be seen as a lost opportunity for that financial advisor. And for me, it's all about the client. Where can I add value? Where can I give them some expertise to diversify their portfolio, give them more confidence and clarity? And we believe in commercial real estate. There's a lot of sectors, office, residential, retail, etc. But we like apartments because of what it is and so on. But we think passive income is another great strategy besides just portfolio income. So we're going to be supportive of a client who's looking at that. I had a client recently who brought one to my attention, and I said, you have my blessing and go ahead. So I think he's probably going to invest in that, and it's a senior housing deal.
Yeah. So that's, I like that approach. And to me, it's a world of abundance, right? And so if you're worried about that client that maybe won't invest or will take that 50 grand and is investing somewhere else versus keeping their money with you, you're not thinking about how abundant it really is and how much opportunity there really truly is. To me, that's a fairly short-sighted, which I do think a lot of people are thinking like that, but that would be great to change, obviously.
Right. And I also think too, Todd, some of these advisors aren't invested in that themselves, so they don't have any personal experience or knowledge of what it is, how it works, what the pros and cons are, and what the potential is. So that's part of it too. If you don't know what it is, your first inclination might to say, hey, this is a bad idea, or don't do it.
Sure. So tell me a little bit more kind of about your business. What's you got a great title. What is it? What are you trying to do with people, and kind of just give me the ins and outs of it?
Well, I think in our industry, there's a couple different segments. So there's insurance broker dealers, Mass Mutual, Northwestern Mutual, etc. And then there's wirehouses, whether that's Merrill Lynch, Morgan Stanley. And then there's independent broker dealers like LPL Financial, Ameriprise, Commonwealth Financial. And they're all a little bit different, but they also have some similarities. Mm-hmm. And so with LPL Financial, we don't have any proprietary solutions. Well, a proprietary solution is if you go to Fidelity and get a Fidelity mutual fund. Well, there's some conflicts of interest when people buy proprietary solutions. So my job is really to go to the mall and go shopping for my clients. And we can, in essence, go in any store. We're not limited to JCPenney. So clients like that open architecture and the opportunity to buy almost anything that's going to meet their needs. But I think when we're talking about financial planning, the plan comes first. So if you're going to build a house, you probably would start with a blueprint. Before you start pounding nails and putting in the foundation, you want to know, well, what's the plan, or what's the roadmap on your trip to Florida? So we start with a blueprint, the financial plan, and find out what their financial goals, objectives, concerns are, where their shortfalls are, where their risks are, and then come back with recommendations and solutions. And we really want to have all our clients know what time it is, big picture, not necessarily all the details. So in that planning process, we're trying to engage both husband and wife in that process so they have confidence and clarity.
So how do you approach working with let's say that somebody that's young, they're an entrepreneur, maybe they're a real estate investor. How do you approach working with them? Obviously, it's going to be different than somebody who is, works at a bank or something like that.
Right. So there's a difference in working with somebody who's self-employed and somebody who works at, Fortune 500 companies, and they have, lots of benefits and so on and so forth. So as a small business owner myself, I have to provide myself with health insurance, protection for my family, death, disability coverage, those type of things, but also a retirement plan. So in our office, we set up a 401k plan to cover myself and the employees. The employees can put in pre-tax or Roth, no income restrictions. And then I put in 24% of their income to the plan. So it's a pretty generous retirement plan. So I think ultimately in working with a small business owner, I just want to have them understand what some of their risks are, but also some of their opportunities, whether it's a retirement plan, an IRA, education funding for their kids. But also if they're a real estate investor, maybe they have 10 single family homes, or maybe they want to invest in an apartment syndication. There's connections that we have there. We might be able to refer somebody in that area to, apartment syndicator.
So I'm going to try to stump you. Is that okay?
Go for it.
All right. So I'm going to ask you a few questions about why. Why would I, as a real estate investor, I'm making great returns on my investment, right? And I'm doing really well. Why would I take and put some of my money into IRA or really a mutual fund or anything like that when I'm making such good returns on my real estate, and I can just continue to do that with all my money? What would make it attractive?
I think, Todd, that's a really good question. And I think from a liquidity standpoint, that's one issue, because ultimately if something happens and somebody needed a bunch of cash, it's hard to get money out of, commercial real estate. So liquidity would be one issue. Number two, we know there's ups and downs in the stock market. We also know there's ups and downs in the real estate market. And so there's risk in both investment strategies, but I think they complement each other. So diversification would be one answer. Liquidity would be another answer. And then, number three, when you're doing an IRA and you can deduct it as a self-employed person, or a retirement plan, simplified employee pension, or a SEP plan, or a solo 401k, there's some tax benefits as well. So, a couple things. I don't think one is right or one is wrong. They each have pros and cons, but that's how I would answer that question.
Okay. Yeah, good answer. But by the way, I do have both, so I was
Good.
just trying to give you a hard time.
Very good.
So one of the things for me, I get real estate, right? I know my niche in real estate, and so it's easy for me to go, this is what I'm going to invest in. I get it. I've studied it. I know what's happening day in and day out. But when I talk to my financial advisor, I go, well, what should I be doing? And there's option A, B, C, D, E, F. I mean, like, how do you navigate through all that stuff to understand, like, you just mentioned like the SAP, the 401k, all this stuff. What's the difference, and why should I invest in one thing and not the other? And why is there so many products out there?
Yep. I think it's kind of like going to a doctor, and the doctor is going to do a diagnosis. And before he or she gives a prescription, they got to ask good questions so that they make the right diagnosis and they give the good recommendation. So you're right, as far as a retirement plan for a self-employed person, there's pros and cons to each different plan. But I think ultimately my clients are looking for a recommendation or a choice between option A and option B, and they decide what they think makes most sense. And most clients really want to know, am I doing the right thing? Am I on track? And, you know, am I doing the right things? So ultimately, they don't want to know all the nitty gritty. It's kind of like, do you have the time, the interest, and the knowledge? So most of our clients don't have all three, and that's why they use me as their coach, their financial planner, and so on. Same thing with commercial real estate. I don't have the time, the interest, and the knowledge that Todd Dexheimer has, and that's why I invested in apartment syndication with you, because you have the time, the experience, the knowledge, and so on. So it's really an opportunity to deploy some capital with you because you have the time, interest, and knowledge, which I don't have. Same thing with these other investment and financial planning issues. You know, we have the time, the interest, and the knowledge to educate ourselves, do research, and do what's right for the client.
Yeah, and I think that's really important for people to understand. You can go and do it yourself, right? You can invest in stocks fairly cheaply by yourself and bonds and all that kind of stuff, and you could set up your own quote unquote mutual fund. But if you're not focused in it and you're not excited about it and you don't know what you're doing, you're just not going to be successful. For me, I wouldn't be successful on my own doing that because I have no interest, and I don't have the time for it. So it just wouldn't be a fit for me to go in and do that. 'Cause I know people that do it and they do really well. It just wouldn't be a fit for me. So then you have to hire someone like you that's actually that does know it and that does have interest in it.
Right.
Hey, so this is normally where we thank our sponsor, but instead of that, through Christmas, we're going to be talking about the best Christmas ever, BCE movement.org. And we have a family that's been nominated, the group that I'm working with. So basically, what the organization is every year they're supporting 200 families throughout the U.S. and world. They're basically providing the best Christmas ever to a family who's been down and out, usually through no fault of really their own. And this is the case with the family that the group that I'm working with is nominated. So this group, or this family, sorry, has a 17-year-old daughter, and Kelsey, and she was diagnosed with neuroblastoma at 6 months old and was thought of as being cured. In October, she woke up with an unexplainable black eye, was brought to Children's Hospital. Children's did scans over a 2-day period and told the family that Kelsey's cancer was back and it spread all over her body, sinus, liver, spleen, all through her spine and bones. And right now, Kelsey's going through chemotherapy and radiation and just a lot of stress happening on her, of course, and then the family as well. So what we're going to be doing is trying to provide them with some gifts, uh, with helping out around the house, doing some repairs, some cleaning, stuff like that. And then, providing them opportunities to be able to spend time together as a family. So if you feel moved to support that, go to bcemovement.org. Um, and I'll link the actual link to this family. There's a specific link to this family if you want to support this family that we're supporting right now. Of course, they need donations, and if you want to actually participate and be part of it, you can reach out as well to me. You can definitely give us a message and let us know if you do want to actually partake in it. So bcemovement.org is the actual website, and go onto our show notes and you can type it, or you can click on the link that goes directly to this family. So anybody who does it, definitely appreciate it. I know there's a lot of stuff to support all throughout the year, especially this time of the year. So whatever you can do, is absolutely fantastic. Let's move to, I think we'll probably maybe come back to a little bit of the financial planning stuff and the syndication stuff, but let's move on to kind of building your business. You've got a team of 4 right now. What kind of take us through, how did you build that business, and what have you found to be successful in growing?
Yeah. I think, Todd, I'm going to share a couple of Lutheranisms with you today. So
Perfect.
one of my favorite Lutheranisms is life is a team sport. And I'm also an analogy guy. So I'm really good at driving the race car, but I'm terrible at changing tires and pumping gas and changing the spark plugs. And so that's why I've built a team. So I have a licensed sales assistant. She's been with me for 18 years. And she's the behind the scenes person that makes me look good, and she takes care of customer service, doing trades when we're buying securities, etc. So she's been with me 18 years full time. She's my crew chief. She's one that helps me to win the race. And then we hired another gal. Susan's been with us 2.5 years, and she's more non-licensed, clerical, probably 3/4 time. And she's also customer support and so on. And then we also have Connor, who is another LPL financial advisor. So we're trying to grow our team as our business continues to grow. And, like trying to win a race, life's a team sport. You have to have people to back you up. And I'm sure you see that in your business too. You have to have people on your team to help you make things go well with your real estate business.
Yeah.
So that's really what I've done. Yep, is to try and build a team. But in addition of having a great team, I've realized that I don't have all the answers. So I've hired a coach, and I go down to Chicago, 4 times a year for the strategic coach program. And so, you think about some of these professional athletes who are fantastic and they have a coach. Well, if Aaron Rodgers has a coach and he's a great quarterback, well, maybe Luther Hagen should have a coach. So I've been using a coach for about 15 years. And it's helped me both personally and professionally. Not only has a coach been great as a part of my team, but also having mentors. And those are people that have been successful in my industry and my business that I can reach out to, and they give me support and encouragement and so on. But then in addition to a mentor and a coach, I also have a study group. So I get together with some of my peers and we share best practices. And by sharing ideas and best practices, we can better serve our clients and grow our business.
Yeah, I mean, that's great. You're fully committed to, your education, furthering. I mean, you've got a coach, you've got mentors, you've got a peer group, and then you've obviously got a support team. I like that analogy. You're not going to be the race car driver and then get out of your car and change the tires, and jump back in and then drive away. You're probably not going to win any races doing that. And so for you, having that team is critical. And really for anybody who's trying to build a business, having a team is extremely critical.
Right.
Well, that's great. So give us what's one of the biggest mistakes, or just maybe not even the biggest, just what's a mistake that you've made, and how have you learned from it, improved?
I think early on, I didn't have a team. It was just me. So, I was doing everything, but you can't win a race when you get out of the race car and you're changing your own tires. So probably not hiring somebody soon enough to build a team is probably a pretty big mistake. And there's a lot of financial advisors out there, and they work out of an office, and they maybe have no support staff or maybe a part-time person, and they don't want to invest in their business. But if they're on vacation, who's going to service the client? And their expertise is making financial plans, making recommendations, and so on. It's not all the behind-the-scenes client service and support. So I think when you're working with professionals, if I go to the doctor's office and there's no nurse and there's no receptionist there, I kind of scratch my head and say, what kind of clinic is this? And same thing with a financial planning office. If you walk into the office and there's no support staff there and it's just the financial planner, then you kind of wonder, so again, life's a team sport, and, hiring people early makes a lot of sense. And I should have done it earlier, but now I've grown my team and things are going really well.
Well, and I think, especially, well, it's any business, but I can think about your business specifically. If you're focusing on all this other stuff, for one, you're not going to be able to grow your business, right? You're not going to be able to get more and more clients, because eventually there's that point where it's just like you don't have time. But the other thing with it is, if you're doing the bookkeeping, if you're doing all the day-to-day tasks, you don't have time to learn about the industry, the changes in the industry, in order to then better serve your clients. Because we all know that every industry changes very rapidly, and you want to be on top of that. So
Right. Yep.
How would you speak to somebody that's in your industry that wants to get to that next level, wants to get to have a team, and kind of, how would you speak to them? Where they go? What do they do?
I think it comes back to, training, certainly self-improvement through continuing education, but also having a mentor. A study group is a great way. In Bigger Pockets, they have ways for other real estate investors to share best practices with some of their peers. For example, in our industry, we might get 4 to 6 people together and share ideas every 6 months or quarterly, and it's a great way to grow. And certainly having a mentor. I mean, I'm 30 years in the business. I remember when I started in the business, and I didn't know nearly as much and didn't have as much confidence when I was started as what I do today. So I think having those relationships, and I also say, life is about relationships and experiences. And the person who tries to do it on their own is going to have a more challenging time than the person that builds relationships and has a team.
Yeah, absolutely. Building relationships is extremely critical. I mean, and having your eyes open to opportunities, I think, is really important as well.
Right. I think also people have to take risks. And if you don't take a risk, you're not going to get a reward. So investing back in your business is where you're going to get the best return, and where you invest back in yourself.
So let's take it back to your business, and I'm coming into you. You obviously know a little bit about me, so I'm coming to you and I'm saying, hey, give me some advice. I want to make sure my kids and my wife and kids are set up, and I want to make sure that eventually, if I ever do decide to stop doing what I'm doing, which probably will never happen, but if I do that, we're in a good position. What do you suggest to somebody that comes to you? Obviously, there's more detail than that. You really got to dig into to what they're doing, I'm assuming. But kind of, how do you approach that situation in a high level type of thought?
I think what it really comes down to is the priorities and the goals for that couple. So if their goal or priority is to get their kids educated, well, they got to save for that. And college costs has gone up dramatically more than inflation. So they have to save and invest at an early age when those kids are, 1 or 2. My 2 daughters are going to graduate from college with no debt. Well, that's because my wife and I started funding their education when they were, just born, in a 529 plan. But I think in working with a client, we might have one spouse where they had their college paid for by their parents and they have no debt, and another spouse where they had to put themselves through college and they came out of college with some debt. So they might come from 2 different areas philosophically. So we want to find, where's the happy medium in planning for this? And then we kind of put the numbers together and say, well, here's how much you need to fund monthly, and here's some strategies that you potentially can use to meet those goals for educating your kids. I think retirement, for a lot of people, whether you fully retire and move on to the next chapter, people don't really have a good handle on how much it takes, especially as people are continuing to live longer. So one of the most valuable parts of our planning process is doing an analysis with clients, putting in their Social Security, their investments, their pensions if they have it, if they have rental income from apartment investments or single family homes, what kind of income is that going to generate, and mapping out, are you ahead or behind or on track for your goals? And then we can also do what if scenarios right in front of the client. So if their goal is to retire in 10 years at $6,000 a month of take home pay, what does that look like? If they want $8,000 a month, what does that look like? If they want to retire in 8 years or 12 years, how does that affect things? So it really is there to help provide confidence and clarity for our clients so they know how they're doing in areas that they need to kind of buckle down on.
How do you talk to a client that tells you, hey, Luther, I found this business that I really want to invest in, or hey, I got this Bitcoin, I really want to put a bunch of money into that. How do you talk to them and give them advice for something like that? Because I'm assuming you do have clients that come to you and talk to you about other business opportunities, even syndication. How do you talk to them about those type of investments?
Well, and that's a great question, Todd. And I think, the Bitcoin has kind of been the rave, lately. And I think a lot of maybe younger people have gotten involved in Bitcoin. It's that whole risk reward trade-off thing. Do you want to, swing for the fences and, knock one out of the park? Well, that's great, but you also can strike out as well. So we haven't really hardly had any clients ask us about Bitcoin because our clients generally are, 40 years of age or older. The ones that have asked us if we're going to be involved in it, our answer has been no. We're looking for singles and doubles. We're not looking for home runs because we don't want to strike out. As far as, buying a business, I had a friend of mine the other day, and he asked about buying this convenience store in his town, and it had a sporting goods part of it. And I said to him, you don't have the time to take that on with your other full-time job. Why are you thinking about doing that? There's a lot of risk there. I said, here's something that you might consider instead, and that's, an apartment syndication where you can be a passive investor and get all the benefits of investing in commercial real estate. So for this friend, I just told him, knowing what I know about him, he wasn't going to be an on-site manager, and he didn't have the time to manage people. But also I said, with this low unemployment, employees are a big issue. So it's a lot of risk because if there's not someone in the store, he's going to have to run in there. Well, with his full-time job, that wasn't going to work. Now, if somebody's going to be a full-time, manager and run that operation on site, that's one thing. But I think also, do they have experience in that business? I was in the business for 30 years, the first 14 years as an employee, and then 16 years ago, stayed in the industry, just changed the sign on the door. So it was an easy transition for me because I stayed in the industry. So investing in a business sounds good, but the failure rate in the first 5 years is pretty high. So I would just caution them to do a lot of due diligence and make sure that they're careful on making that decision. I wouldn't tell them, no, don't do it. But I would say if you don't have the time, the interest, and the knowledge, it might be too much risk.
Yeah, definitely. Like that advice for sure. You're not telling them no, but you're kind of giving them some guidance and letting them know, these are the things you need to think about, which is great. Let's now hit on a little bit more on the syndications. What attracted you to apartment syndication the most, and why did you decide? Because I know you've invested in a few. Why did you decide that would be something worthwhile doing? Where obviously you've got your fingers on a lot of different types of investment products.
Yep. Well, I have some experience in commercial real estate. So a while back, I bought a commercial lot in Burnsville, And I was intending to maybe put up an office building there and use it myself and rent out some space. But then I decided not to do that. And in the end, I ended up selling that in less than 2 years, and I doubled my money. Using leverage, I was able to buy it at $3 a square foot, sold it for $4 a square foot, and in less than 2 years, I doubled my money. So that was really probably one of the best investments that I ever made. So I had some investment experience in raw land, and then I had an office condo that I bought, paid it off in 12 years, but then I outgrew the space, and so I sold that, and now I'm renting space at my office in Apple Valley where I have more control on my expenses. So, I think commercial real estate has its advantages, but I like the apartment syndication because, number one, I don't have the knowledge and the time. The time is the biggest issue. And I like that sector compared to office or mini storage or retail. I just think that sector, my opinion for me, it's a great sector. And the demand is more than what the supply is. So that helps, on the risk side as well, in my opinion.
Yeah, and I like, you're obviously, you've got your business, you've got your career, that's what you're focusing on. A lot of people get caught up and they go, oh, I'm going to do apartments and I'm going to quit my job and that's what I'm going to do. But you don't necessarily have to do that if you can go about it the right way. And that's kind of what what you're doing. You're investing in real estate, yet you're also maintaining your job because you're doing it very passively. So you can still get some of the benefits. You can still get some of the tax benefits, the depreciation benefits, and all that. Yet you can still maintain your career, what you're doing, and focusing on, and what you're good at.
Correct. And I think the biggest thing for me, Todd, is time. And I've been married for 26 years. I married very well, and I have 2 great daughters. And if I'm taking time away from them, I don't want to jeopardize those relationships. I know there's a lot of people out there who make a lot of money and then been very successful, but they're also on their 2nd or 3rd wife. So time is such a precious commodity. And I remember when I'd come home from work and those little arms would go around my neck, Daddy's home. That's as good as it gets. So I think ultimately people have to manage their time, their quality of life, and that work-life balance, which I think is hard to do, especially for men. But I think I'm doing pretty good at it, and I get a bunch of time off every year. So for me, being a passive investor and having you run the ship, it's great. I'm happy to be on the oars while you're barking out orders how we're going to get there.
Yeah, you can't replace time, right? That's the one thing you definitely can't replace. You can always make more money, but you're just not going to ever get your time back. And that for me has been really important. I got one of the reasons why I never started a podcast before 9 o'clock is because I get my kids on the school bus in the morning. And that's important for me every single morning to be able to wake my kids up and get them going and then get them on the school bus. I love doing it. It's just been part of the relationship building with my kids. And so that time is extremely important. I wouldn't give that up.
Yeah. And I think that's really important. I think, for those people who want to get into commercial real estate, maybe they start out where it's a side hustle for them. And then eventually they transition where they quit their day job and they're full-time in the commercial real estate, but it's a transition. And I think they got to get their feet wet, build their team, educate themselves, have some experience and so on. But, like any business, maybe it's a place where you start your side hustle. And I know on some of your previous podcasts, you've asked people what their favorite book is. And one of my favorite books, yeah, okay. Didn't mean to jump the gun on you, Todd, but one of my favorite books by Robert Kiyosaki is Cash Flow Quadrant. And really what that book talks about is there's 4 quadrants. There's the employee, there's the investor, there's the self-employed person, and then there's the business owner. So a lot of people in the world are employees. They work for a company. They work for the man. But then they say, I want to start my own thing, whether they do a side hustle until they can build it up on their own and then become full-time business owner and quit their day job, they're probably self-employed. So I think about that dentist. The dentist has hygienists and so on, but if he's not there doing his dental work, that business isn't going to continue unless he's got 3 or 4 other dentists on the team in which he's got a business. A business can continue without you if you're gone on vacation for 1 or 2 months. So then you're in the business owner quadrant as opposed to self-employed quadrant. And of course, the investing quadrant is where almost anybody can be in the investing quadrant, whether it's their 401k at work, whether it's a mutual fund, a Roth IRA, passive investor in an apartment syndication. I think everybody wants to be in at least 2 of those quadrants, either employed, self-employed, or business owner, and certainly investing.
Yeah, and I think for investing, at least for me, to me it's important to, well, I think you would second this, to start really early, as early as possible, but then to focus on trying to build that investment income up enough to where it replaces your income eventually. Because for me, when I retire, I don't want to live my life less, than what I do now. I don't want to necessarily retire and then have to live in a shell because I didn't do it properly. For me, I'd rather have potentially even more income than when I'm working. So that's, to me, that investment bucket needs to be very critical as you kind of go along your life path.
Yeah, I agree with that. And I think, as we're helping more and more of our clients become financially independent and then they retire, one of the things, this is philosophical, but personally and professionally, we're trying to help our clients eliminate their personal debt. Now, they can have some investment debt by buying apartments or single family homes, whatever it is, but to have $10,000 on a credit card, that doesn't make sense. To have car loans, I don't think that makes sense. And then for a retiree to have a 30-year mortgage on their house, we're not a big proponent of that. And the reason that we encourage our retirees to be debt-free is when the recession hits like 2008, our retired clients that were debt-free could reduce or suspend their portfolio withdrawal, whereas that retiree with a bunch of debt, they don't have that flexibility. And so they're still taking money out when the market's going down as opposed to being debt-free and having flexibility. So that's a philosophical thing. There's other advisors that think, having a bunch of debt at retirement is okay, but we're kind of in the debt-free camp, other than maybe somebody who says, I'm going to buy an apartment building and use leverage. I don't consider that personal debt. It's more investment debt to provide some leverage and enhance returns.
Yeah, no, I couldn't agree more with that philosophy. Like you said, in the recession, if you had to take money, you're a seller at the worst time to be a seller, just to pay your bills.
Yeah.
And that doesn't make a lot of sense. So if you can sustain, you can either slow down the draws or even stop them during the worst times. Look at what happened. I mean, I don't remember what the whatever Dow Jones went down to, like 7,000 or whatever it went down to in 2009. Yeah. And look at where it is now. And that's just a reflection of how far the stocks went down. And if you didn't sell anything, you kept all those, where they would be now is definitely, triple?
Yep. I mean, ultimately, the market went down 38%. We've had a great expansion in the markets. Our economy certainly has grown significantly since then. The unemployment rate is the lowest it's been in, 20 some years. There's more job openings right now than people looking for work. So, I mean, we got a lot of good things as a backdrop for fundamentals.
Yeah. Yep. And eventually it'll go back down, but at the same time, if they're following your advice, they don't have a ton to worry about.
Right. Not only, I want to just add one thing too, Todd, and that is not only are we helping our clients on the asset side, but also the liability side. But, cash is king, and having a cash reserve of 6 months of expenses is pretty important too, especially when a recession hits or the market goes down in, the stock market or the real estate market, cash is king, and there's an opportunity cost in not having that cash reserve.
Yeah, I definitely couldn't agree more. I mean, very quickly cash can go away. So having that reserve is very critical. So 6 months or maybe even more, depending on how you live, is for sure, I would say, very, very critical. So I got one last question, and we'll kind of wrap up with some questions on how our listeners can get in touch with you and stuff like that. But last question for me is, what are your 3 pillars of wealth creation? You can answer
My 3,
however you.
Yeah, I think my 3 pillars are build a solid portfolio, and whether that's an IRA or 401k, whatever it is, mutual funds. I think a portfolio where you have portfolio income makes a lot of sense. Number 2, I think, building a business. I'm a big proponent of my clients doing that side hustle or building their own business or becoming self-employed where they control their own destiny. I think number 3, building a real estate portfolio is something that I'm trying to do to diversify beyond my, investment portfolio. So, investment portfolio, build your own business, and passive income through commercial real estate, I think makes a lot of sense. Those are my 3 pillars of wealth creation.
Cool. So how somebody wants to find a financial planner? I'm going to phrase this as somebody wants to find a financial planner like you,
Yeah.
that actually gets it, gets the whole picture, right?
Yeah.
How do you go about finding a financial planner that gets the whole picture? Because we can just go and look on the internet, financial planner, we can find anybody, right? But we want to find the right person that really gets it. How do you find that person?
I think a good way is to use a website, cfp.net. cfp.net is Certified Financial Planner website. And so in accounting, the CPA is really the gold standard. If you're a CPA, you're at the top of your game. You're a professional. In the legal business, it's the JD. In the medical business, it's MD. So less than half of financial planners and financial advisors have the Certified Financial Planner designation. And there's a code of ethics that goes with that Certified Financial Planner designation. It takes a lot of work and a lot of dedication. And the people that have reached the Certified Financial Planner designation are long-term people who are committed to the industry. They're committed to a code of ethics. And if you go on the cfp.net website, you can do a search by zip code. So if I'm looking in Apple Valley, I just punch in 55124. It'll give me a list of financial planners in the area, and I can look at their bios. It'll connect me to their website. And I think that's really a good place to start. Certified Financial Planner, gold standard in our industry. Number 2, if you get a referral from a friend or you bump into somebody, in the community, you can also do research on that person by going to a consumer website, finra.org, FINRA.org, finra.org. And on there, Todd, there's a broker check where you type in the person's name, Tom Smith, Mary Jones. It'll give you their work history. It'll give you their securities license. But it also will give you if they've had consumer complaints. It'll also tell you if they've gone into personal bankruptcy. Well, if I'm going to hire a financial planner, I probably don't want someone who's been through financial troubles. Number 2, if they have a bunch of consumer complaints, that might be an issue as well. And if they've been in the business for just, 1 or 2 years, what's their experience and how can they help? So I think that's a way to research somebody that you've identified as a potential financial planner to work with you, but also finding one. The cfp.net website's a great way. And of course, referrals from a trusted friend is a good way to find someone as well.
I'm going to add that one thing I think is to ask them questions that are important to you and to see how they'll answer it. Because if I'm asking you, what do you think about me doing some passive real estate investing? And you say, no, don't do it. Well, then do I really want you as my financial advisor? Because that's what I want to do. You know, so I think ask, or same thing with, you know, hey, I'm thinking about running a business. You know, what do you think about that? If you say, well, no, you know, don't do that. You know, those types of questions I think are really important before you just sign on with somebody and assume that they're just going to take care of you.
Right.
So one last question. You kind of brought this up, is what's the difference between, you know, how do you get paid and so on, and just what do they do between a stockbroker, insurance, and financial planner?
Well, I think ultimately that's an important distinction here as far as who you work with and what their motivation is, if you will. And I think ultimately, if you're working with a stockbroker and he or she is just trying to buy and sell stocks and earn a commission on every buy or sell, that may or may not be in your best interest. And is there planning involved? I think ultimately, you know, our philosophy is we're going to start with a blueprint because we want to know about you. I don't want to just be a stockbroker and sell the hot stock of the day. I don't think that's serving my client well. And you know, that industry has changed a lot. There's a lot less of that going on than what there was years and years ago. So ultimately, I think you want to find out where they're coming from and what their philosophy is and how they work with people. Some of those people that, you know, work at a wirehouse do an excellent job. Maybe they have a CFP, Certified Financial Planner. If you go to an insurance broker dealer advisor, you know, Northwestern Mutual or Mass Mutual, they work for an insurance company, so they can have influence from the headquarters to sell insurance. Now, there's a time and a place, and I think ultimately, you know, are you serving my best interests, and are you doing a good diagnosis to give me the right information? If all the solution comes back as life insurance is the answer for everything, then I would maybe question on if that's, you know, the right relationship. Number three, if you go to an independent advisor and they do a financial plan for you, you don't have to buy a product for that person to get paid. You don't have to buy a stock. You don't have to buy a life insurance policy. They'll charge you for advice and for a plan, and you may buy a product from them, but ultimately it's about advice and a plan. So how do different people get paid? Well, they might be paid by commission. So if you buy a life insurance policy, they'll get paid by commission. That's not right or wrong. It's just that's how it works. If you buy stocks or mutual funds, you could pay a commission there. If you have a financial plan, they're going to charge you a fee to put that plan together. Like you go to the CPA is going to charge you for advice. If you go to the estate planning attorney, they're going to charge you a fee to put together an estate plan. So, you know, those different segments all have different value propositions, pros and cons, and I think it really comes down to relationship. I think you have to like the person, and you have to have some common ground there, and trust. And trust is, you know, I've been doing this for 30 years, and we just had a client event last week. It was a fun event. I don't want to get off a tangent here, but it was the NFL season opener, Infinity Wealth Alliance, happy hour. We did it at a restaurant. Most of the people were clients, and they dressed up in their NFL gear. We had appetizers and beverages. Well, I had a mom who's in her 70s and her son who's in her 40s there. And the mom said to me something basically on the lines of, I love working with Luther. That was pretty cool because of trust and relationship. So ultimately, you know, she referred her son, and she was referred to me by her brother-in-law. So I think ultimately you're either paid in our industry by commission or by fee, and there's pros and cons, but it's all about relationship and trust and the value that we bring to our clients every day.
Cool. So Luther, how can our listeners get in touch with you, learn more about kind of what you're doing, and be able to reach out to you?
Well, they could go on the cfp.net website and find me by doing a zip code search, 55124, and then see our our bio on the CFP website. Number two, they could go to our own website, which is iwalliance.com, or email me at luther.hagen, Hagen, at lpl.com, or simply call my office, 952-431-2224, and my team would be happy to connect us.
Awesome. Well, I would suggest anybody that's especially in Twin Cities Metro to be contacting you.
Yep.
And at least kind of ask you some questions and get to know you a little bit.
Good.
I appreciate you being on the show and taking time from your day, and definitely some good advice. I had fun talking with a financial advisor. Sometimes you guys get a bad rap in the real estate world, but I think a good financial advisor is very critical to really anybody. But real estate investors, I think for some reason, get a bad rap to them, and I think it's important to make sure that you're investing in your whole picture versus just real estate. So definitely appreciate you showing and sharing advice.
I appreciate the opportunity. It's great talking with you today. Keep up the good work, Todd, and we'll talk to you again.
Hey, special thanks to Luther Hagen for joining us on the show. Appreciate him spending his time with us and giving us a ton of value. A couple of things I took from Luther. First of all, he talked about getting a coach, getting mentors, making sure you have people surrounding you that know more than you, that can teach you, that can lead you along the way. So whether you have to pay a coach, whether you can have mentors that you just know that are willing to work with you, likely you have to add value to them. We always talk about that. Don't just assume that somebody's going to teach you everything they know just out of the goodness of their heart. You're either going to pay them, or you're going to, help them out, do things for them. But in return, they're going to teach you along the way. Second, he talked about just building a business. Make sure you've got a business that you can build that will support you, make money, make cash flow. And then the next thing he talked about is just having a solid investment portfolio, making sure that you're taking care of your future and not just the present, making sure you've got that solid investment portfolio and thinking about, down the road. So again, thanks for Luther being on the show. Appreciate him. And if you haven't subscribed yet, go on to iTunes, Stitcher, SoundCloud, wherever you are, and subscribe to our show. Give us a 5-star rating and review if you can on iTunes, and share this out with your friends. Go on to Facebook, Instagram, LinkedIn, wherever you're at. Share this out. Let other people know that you enjoy the show. That would be fantastic. Help us spread the word. And then feel free to be a part of our Facebook page. We've got a Facebook page, so Pillars of Wealth Facebook. Be a part of that as well. I'm Todd Dexheimer. I'm signing out. Make every day a Saturday. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.